go out there and get that house before the summer's over and get your kids moved in before school starts. That's what I'd say.
Hey there, everyone. Dave Barlow here with the gang from Sell for 1% plus Rich Cercone from Equitable Finance. And Rich, we are here to talk interest rates, what's happening in the world of financial markets, and anything else that you want to talk about that isn't not conspiratory. Did I say that right?
Conspiratory?
Conspiratory. Or ranks.
Well, Dave, it's a beautiful, beautiful sunny day. I'm looking out.
It is.
And I have sunny news for the folks.
All right.
Sunny news is that we had a very tame inflation number this morning. The CPI number came in lower than expected, which means there's less inflation, which then in turn means that the Fed is more inclined to possibly lower rates moving forward, because one of the concerns has been that inflation was too high to lower rates. So we have some forward-looking guidance now. As I've always said, the markets are looking at what the Fed will do, not what they're doing today. And they're now talking about maybe a rate cut in September. And there's a couple of economists who were on CNBC this morning talking about that the Fed should lower rates this month in their July meeting. Now, I don't think that's going to happen, but it's being discussed at least. All these things are future guidance, which the mortgage market likes. And so we are seeing a slight tick down in rates here this morning. We're probably solidly in the sixes right now on most scenarios. And government loans, VA loans, FHA loans are down in the low sixes. And so go out there and get that house before the summer's over and get your kids moved in before school starts. That's what I'd say.
So the election decline, it's coming a little late, but it sounds like it might be coming.
I don't want to get political and I don't want to be conspiratorial, so I won't say anything about that.
It's data driven. The CPI is down. They were already saying September rate cuts. And so I think Rich is right. July meeting, they'll say things look good. We're data dependent. We want to see one more month of this. Then in a month, we'll get cooked numbers. Things will look great. Whether that has to do with the election or not, I think the numbers are probably always cooked. And then we'll get rate cuts. But like Rich said, the market's pricing it in now. So if you're a buyer, do not wait. Because if they don't cut rates, what's going to happen? They're going to go.
They're not waiting for the Fed to make some announcement in July or September. They know that there's going to be some rate cuts, and they're going to price that into their rates as we move forward here in the coming days. So the time to strike is now. The time to buy is now, really, because we could have a Fed announcement that they're lowering rates, and rates go up that very same day. I've seen that happen before.
Well, the wild card being is when they come back next month and they revise the numbers. Doesn't matter. It's already done. The good news is already out there. The bad news never catches back up. I forget the saying, news gets around the world before the truth has a chance to put its pants on. My point is that in 30 days, if they revise the numbers and interest rates start to pop up a little bit, then you've lost out on what's going on today. They'll probably revise it more than 30 days out in the future. I can't see the future. Who knows? But I mean, that's my prediction. That July meeting will be things are good. After that meeting, numbers may or may not get revised, but then there'll be another number coming out that puts that into that headline in the past. So we'll see what happens. But I expect rates to come down in September.
Yeah, it's a great time to be looking at houses.
All right, guys. How about that, Jason being optimistic? That's better than your normal person.